Hello, welcome to TheDowTheory.com. In this short video, I'm going to teach you how to derive the buy and sell signals according to the classical Dow theory. Let's go. When I talk about getting the buy and sell signals according to the Dow theory, I mean by that also the appraisal of primary bull markets and primary bear markets. A bull market is the right time to buy, a bear market is the right time to sell. But for traders, we normally take a shortcut and say, look, this is a buy signal and this is a sell signal. However, we should keep in mind that this means that we are in a primary bull market when we buy and we are in a primary bear market when we sell. Let's get started and let's see how we derive this buy, primary bull market, or sell signals, primary bear market, according to the Dow theory. So, as you know, under the Dow theory, we have two indexes. We have, on the one hand, the Dow Industrials, and on the other hand, we have the Dow Transportation. I drew in black the Dow Industrials, and I drew in red the Dow Transportation. So here we have on the top the Dow Industrials, and at the bottom the Dow Transportation. So let's make the transition from a bull market, which is bull market signal, to a bear market, which is a sell signal. So for instance here we see that we are making higher highs and lower lows, which is typical of a bull market. The same happens to the transport. We have higher highs and also higher lows. So now let's imagine a last high and then the market goes down. The same happens to the transportation. We make a high, higher high, and then it goes down. And then, according to the Dow theory, if it lasts at least 3 weeks and at least it declines 3% on a confirmed basis, so this means that also the Dow Transportation must drop by 3%, and also that decline must span at least 3 weeks. So if we have such a secondary reaction against the still existing bull market, if you watch, it's still a bull market, but now we get a secondary reaction confirmed, because you know that the principle of confirmation is vital according to the Dow theory. So if the transportation would be taking higher highs, then we wouldn't have a secondary reaction. So once we have this secondary reaction, then what happens next is vital. So sooner or later, we're going to get a rally. And if this new rally does not exceed on a confirmed basis the last recorded highs, the highs previous to the start of the secondary reaction, then this rally, provided it surges more than 3%, then this sets up both the Dow Industrials and the Transportation for a potential sell signal. Some of you may be asking why I didn't say anything about the transportation, and I didn't say that it must also rise by 3%. Because when we deal with the rally that sets up the potential sell signal, we only require confirmation by one index. So for the secondary reaction to exist, we demand confirmation both as to the drop and as to the time. However, for the rally that follows, that will complete the setup for a sell signal, we only need that either the Dow Industrials or the Dow Transportation raise by 3% or more. Let's continue. Now that we have this rally, more than 3%, this rally must last at least 2 or more days. And the time must be confirmed, so 2 or more days for both indexes. And now then you should pay attention to the secondary reaction lows. Let's make a horizontal projection of these lows. Let's imagine that after this rally, as I said, it does not break up above the last recorded bull market highs, and then it drops. And also the transportation drops and confirms. So we have here this breakdown point, and here this breakdown point. This is the sell signal according to the Dow theory. So now I will sum up. We had a bull market, so higher highs and higher lows, always confirmed, Dow theory. Then we get a big pullback that drops at least 3% on both indexes and lasts at least 3 calendar weeks, here and here. So this confirmed drop means that we have a secondary reaction, and what happens next is vital. So if there is a rally, but this rally fails to exceed, to break above the last recorded bull market highs, and it lasts at least 2 days, and it rallies by at least 3%, then when the drop follows, if this decline breaks down below the secondary reaction lows, these are the secondary reaction lows, then a confirmed breakdown of such lows means a sell signal.